Hey everyone, this is Anand Bergman, founder and CEO of IRA Financial. Welcome to another episode of AdBits, where I will be sharing bits of knowledge about self-directed retirement. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of AdBits. Today we're talking about, are all solo 401k plans the same? So before we get into the different types of solo 401ks, let me just briefly mention what is a solo 401k plan. Solo 401k plan is essentially a regular 401k plan that you would receive if you worked at an employer like Apple, Google, or ABC Inc., except the solo 401k plan is specifically designed for someone who's self-employed. So someone who's a sole proprietorship, single member LLC, C Corp, S Corp, someone who has no full-time employees other than themselves, a spouse, or another owner. So in sum, no non-owner employees that work more than 1,000 hours during the year or 2 consecutive years of 500 hours. Okay, so why is the solo 401k plan different than a regular 401k? Well, it's not subject to ERISA. And ERISA is a body of laws created in 1973 that essentially was created to protect non-owner employees, to make sure they're receiving all the benefits that the plan is supposed to offer to all participants. So the idea is that, hey, if there are no non-owner employees, then there's nothing for ERISA to protect, because you're your own boss, right? If you're a sole proprietorship, single member LLC, the only owner, employee of a C Corp, S Corp, it's just you or another non-owner. So there's nothing for ERISA to really protect. So that's why the solo K is so valuable and so, I think, rewarding, is because you're not subject to ERISA and you get all the benefits. You can contribute up to $58,000 or $64,500 if you're over 50, 2021. And that's broken down into an employee deferral, $19,500 or $26,000, dollar for dollar, plus the 20 or 25% profit sharing if you're a C or S Corp W-2 employee. Okay, there's a loan feature, lets you borrow up to $50K. You can do traditional investments or alternative asset investments, Roth contributions, and very good asset creditor protection. So are all solo Ks the same? And the answer is no. And I think a good analogy is if you look at the three major religions, right? Christianity, Judaism, and Islam. Each religion has their own Bible, right? Jews have the Old Testament, Christians have the Old and the New Testament, and Muslims have the Quran. Okay? So basically those books control what someone in that religion is technically allowed to do, right? There's rules, and most of the three religions have similar rules. Obviously, don't kill, don't commit adultery, much like the 10 Commandments. But there are also different rules, like Jews and Muslims will pray 3 times a day. And there's different rules of baptism and Christianity and the like. So each Bible, each biblical text has their own set of rules and procedures. The same thing is with the solo K. You can go to Bank of America, TD Ameritrade, E-Trade, Schwab. They'll give you a solo 401k, okay? It's a plan, but they have the right as the document sponsor. So they have the right to determine what provisions in that plan are checked off, right? What are applicable to your business or to you as the trustee. So they can easily carve out that you can't do alternative assets. They can carve out that you can't do a loan. They can carve out that you can't do Roth contributions. They can carve out that you can't do profit sharing. So there's reasons for that, right? Obviously, if it's a free plan, they want it to be simple. They don't want it to be complicated, i.e. the loan feature. And they also want to make sure that you're using their products, right? E-Trade's not giving you a 401k plan for free because they're nice. They're giving you a 401k plan for free because they want you to contribute to that plan and then use those funds to buy their investments so they can make money. And there's nothing wrong with that. That's America, and that's fine. On the flip side, you can go to a company like IRA Financial and a number of other document self-directed companies that don't make money on selling investments. IRA Financial is not a Charles Schwab. We're not a financial institution that sells investments. We're non-fiduciaries. We don't provide investment advice. We simply, in the 401k side, will provide you a document and then provide you the administration services. So in our capacity, we don't care if you buy real estate or buy stocks or even buy Bitcoin. We're responsible for the document and making sure you're complying with all the provisions in the document. So that means we basically open up all available options in our document and allow you as the business owner to decide, and trustee, what you want to do. So for example, we'll allow for employee deferrals, pre-tax Roth, and even after tax. We'll allow profit sharing contributions. Okay, we'll allow for alternative asset investments. We'll allow for the purchase of qualifying employer securities, whereas a 401k buys stock in the adopting employer. We'll allow for the loan provision. Okay, we'll allow for hardships. There's a set number of options that I just mentioned that are potentially available to all plans. However, not all document sponsors will provide those options. So going back to the analogy of the biblical text, each plan is different, and basically it's up to the document sponsor, the institution that sponsors the document, to decide what options they will make available to you. Yes, can you create your own solo 401k plan and then give yourself all the options? Yeah, but is it worth it? I mean, it's going to take you months, if not years, to figure out what's in the plan and then get it approved by the IRS, because you're going to want it blessed by the IRS before you use it. So it's easier, and that's the whole idea behind our industry, the self-directed industry, is you just go to a company like IRA Financial, pay a little bit of money, get a document, an IRS opinion letter, avail yourself of all the options under the plan, and also have a firm that can do all your plan administration. Versus going to a financial institution like Schwab, getting a free plan, but being relegated to invest in the investments they provide, and more likely than not receiving a loan feature option, Roth contribution option. Why? Because their concept is, hey, we want to keep these plan documents simple. We don't want our clients to ask us a lot of questions because we're not in the plan administration business. We just are giving you a free plan so we can sell investments. Okay, and that's one side. And the other side is the self-directed industry, which takes the opposite approach and says, okay, we're not going to sell you investments. We're not fiduciaries. We are plan document experts. We will provide you an IRS approved plan document. We'll open up all options you want, and we will help you administer it, i.e. provide you updates in the case of a change in law, restatements, and also help you file the 5500 EZ, which is due each year if your plan assets total more than $250,000 as of 12/31. So in sum, there's incredible amount of options that are available in a solo 401k plan in a perfect world, i.e. employee deferrals, pre-tax Roth after tax, profit sharing contributions, loan feature, the ability to do alternative asset investments, the ability to buy qualified employer securities, loan feature, hardship distributions, in-plan service withdrawals, CARES Act distributions. There's lots of things that are potentially available in a plan, and it's up to you to decide what type of plan you want. All plans that you receive from a reputable financial institution or document provider company should have an opinion letter that shows that the IRA blessed it, but it's then up to the document sponsor, i.e. the financial institution or document sponsor, to then allow you or provide you with the options in the plan. Okay, so if you went to E-Trade and said, hey, I want the loan feature, and they don't offer it, they have the ability to open up that option because every plan technically has that option, but they're probably going to say no because, again, they want that money in the plan so it can be invested in their products, and they don't want you taking that money out and using it for other purposes, plus all the administration and complexity involved when you take a loan. Okay, so there's no right or wrong. Just like there's no right or wrong religion, it's up to you. It's up to your needs and your desires from a retirement and investment standpoint. It's just important that you know that there are different types of 401k plans, some free, some not free. Some allow for only traditional investments. Some allow for both. Some don't allow for a loan. Some allow for the loan. Some allow for Roth. Some don't. Some allow for after-tax mega Roth contributions. Some don't. So in some, just ask questions. Make sure you're getting the right plan document that fits your investment and retirement needs. And best of all, enjoy. Okay? Enjoy the benefits, enjoy the control, and enjoy watching your money grow. Because if you are consistent and you're diligent and you make annual contributions to a solo K, you're going to have lots of money and lots of wealth when you retire, because the maximum contribution limits are so much greater than an IRA. So there you have it. There is the hopefully simple and short explanation that no, all solo 401k plans are not the same. It's Adam Bergman, IRA Financial. Thanks for listening. Thanks for watching. If you're interested in more videos on solo 401ks, obviously check out our YouTube channel, podcasts, AdBits. There's lots of different interesting podcasts and videos on various solo 401k topics. Thanks again. Subscribe if you haven't. Definitely drop us a like. Really appreciate that. Thanks again for all your support. Stay healthy and talk to everyone again soon next week.